Welcome back to Investing Talk podcast. Today we're embarking on a really crucial deep dive into Apple. We're tackling that key question. Is now a good time to consider buying Apple stock? Our aim here is to give you a shortcut, really, to get you well informed, pulling out the key insights from, well, all our latest analysis and reports.
That's right. And we're not just, throwing numbers at you. We want to set the stage so you can understand how these upcoming product cycles and the current market sentiment, how they really affect investment decisions. We'll try to connect those dots between where Apple stands now and, well, its plans for the future.
Okay, sounds good. Before we unpack all of that fascinating info, just a quick reminder, please do subscribe, like, and comment on this deep dive. Your engagement, it really helps us bring more valuable insights your way. And hey, if you find this analysis useful, maybe consider buying us a coffee. It helps support our work. So let's get started. The big picture first. Our latest analysis gives Apple an overall rating of, 5.2 out of 10, and a weak hold recommendation. What does weak hold actually mean for someone listening?
Well, a weak hold, it really signals a kind of cautious stance. It's definitely not a strong go buy it now signal, but it's also not saying sell immediately. It suggests that maybe for short-term traders, those looking for quick gains, it might be better to hold off. But for longer-term investors, it kind of implies patience is needed. The near-term upside might be a bit limited.
Okay, patience. Got it. And when we dig into Apple's financial health, the reports highlight some really impressive strengths, don't they? Superior profit margins, both gross and net.
Oh, absolutely. They're consistently high. And the cash generation is, well, it's phenomenal. We're talking, over $100 billion in free cash flow? Massive operating cash flow, too.
Right, and a strong balance sheet overall. Plus, that return on equity looks amazing, like 164%. Though our analysis does note that it's maybe a bit inflated by high leverage.
Yes, exactly. Those ROE numbers look incredible, but the leverage point is key. And while those fundamentals are strong, there are some, let's say, underlying concerns to think about. We've actually seen earnings per share growth decline slightly, down about 0.8%. And revenue growth, well, it's quite modest for Apple, just over 2% in 2024. That's a big slowdown compared to historically. Plus, as you hinted, the debt levels are high. That debt-to-equity ratio is over 2. So it does raise that important question. How sustainable are these really impressive margins if growth is slowing down?
That really is the core question, isn't it? Slowing growth puts pressure on those premium margins eventually, which I guess leads us straight into valuation. The analysis seems pretty clear that Apple's valuation is leaning towards being expensive right now.
It definitely is leaning that way. If we break it down, the price-to-earnings ratio, the PE, is around 28. Now, that's actually a bit lower than the tech sector average, but still, it's quite high for a company with slowing growth.
Yeah.
Then you look at price to sales, the PS ratio, also pretty elevated for a mature tech firm. And price to book, PB, is, well, significantly overvalued on a book value basis, over 50 times.
Wow, 50 times book value.
Yeah. And even a conservative discounted cash flow model, a DCF, suggests a fair value quite a bit lower than where it's trading now, maybe around $110. Implying, maybe a 45% overvaluation relative to growth prospects. Now, compared to, say, Microsoft, its PE is lower. Microsoft's is higher, around 37, but it's higher than Alphabet's, which is around 23. So connecting the dots, while it's not the most expensive tech stock, the current price suggests an awful lot of future growth is already baked in.
Okay, so valuation is a concern. What about the technicals? What are the charts telling us about the stock price itself?
The technical picture, it pretty much reinforces those valuation concerns. It paints a more bearish outlook, unfortunately. The price has been trending down, down nearly 5% over 30 days, almost 18% over 90 days. It's trading below its 50-day moving average, which is often seen as a negative signal for short-term momentum, and it's hovering near its 20-day average.
And things like RSI and MACD.
Right. The relative strength index, the RSI, it's technically neutral around 44, but it's trending lower. So momentum isn't really picking up. And the MACD indicator is negative, minus 0.75, and it's had a bearish signal line crossover. That often suggests weakening short-term momentum, maybe pointing to further declines. Plus, volatility is quite high, over 40% annualized. That signals a lot of market uncertainty around Apple right now. It seems to be trading in a range roughly between $169 for support and maybe $225 for resistance. So yeah, the technicals largely agree with valuation worries, suggesting continued downward pressure, at least in the near term.
Okay, so a cautious picture from financials and technicals. Let's shift gears then. What about recent news and market sentiment? It feels like we're getting some mixed signals lately.
Definitely mixed signals. On the negative side, you have the WWDC event, the developer conference. The announcements there, especially around Apple Intelligence, they didn't really wow investors, did they? The stock actually dipped to about 1.5% after that.
Yeah, I remember that. And we've seen some analyst downgrades too, like Needham moving to hold.
Correct. Needham cited the expensive valuation and maybe weaker expectations for the next iPhone upgrade cycle. JP Morgan also trimmed their price target slightly, concerned about iPhone 17 demand. So definitely some caution there.
But it's not all negative, right? What about the positives?
No, not at all. You have to balance it. Apple did beat earnings expectations in Q2 2025. Both EPS and revenue came in ahead of estimates. And crucially, the services segment showed really strong double-digit growth. That's a high-margin business, a key long-term driver. Yeah. We also saw okay performance, regionally growth in the Americas and Japan, but yeah, continued weakness in China. That remains a challenge. So it really makes you ask, how much of this bad news or caution is already factored into the stock price versus the underlying strength you still see in areas like services.
That's a great question, what's already priced in. So looking ahead then, what does this all mean for Apple's path forward? Our sources mentioned several key catalysts coming up that could sway things.
Absolutely. These upcoming events are critical. First off, we're watching for the Q3 2025 earnings expected around July 30th. That's the next big financial check-in. Then there are the whispers and reports around iPhone 17 production. Interestingly, some reports suggest production might be about 9% lower than for the iPhone 16.
Lower production.
Yeah, something to watch. And then, of course, the main event, the expected iPhone 17 launch in September. This year includes that new Air model we talked about, plus the continued rollout of Apple Intelligence through 2025 and 2026 needs monitoring. So for investors, these launches, these earnings, they're potential inflection points. They could really shift sentiment and growth expectations.
Okay.
The market watches these very, very closely.
Okay, let's really drill down into that iPhone 17 then. Our sources suggest some pretty significant shifts in the lineup itself. Sounds like the Plus model is out.
That's the rumor, yeah. Phasing out the Plus and replacing it with an all-new iPhone 17 Air, supposedly super slim. So the lineup would be the standard iPhone 17, this new 17 Air, the 17 Pro, and the 17 Pro Max. 4 models still, just configured differently.
And this iPhone 17 Air, where does it fit?
It's positioned as potentially the slimmest iPhone ever, maybe around 5.5 millimeters thick. It's expected to have a larger screen, maybe 6.6 inches bigger than the base model, and sit as a kind of mid-tier option. Even the standard iPhone 17 might get a slight screen size bump, maybe to 6.3 inches, matching the 17 Pro. So what's fascinating here is how Apple seems to be strategically segmenting its lineup, perhaps trying to capture a slightly different market segment, adding this Air mobile device, kind of like they did with MacBooks. It could broaden the appeal.
Interesting strategy. Beyond the lineup changes, what about design and, importantly, the display tech? Any big innovations expected there?
On the design front, maybe some tweaks. Rumors mention a new rectangular camera module for the Pro models, maybe going back to aluminum frames instead of titanium, possibly with a mixed glass and aluminum back for durability. The 17 Air might even get a unique centered camera bump. But the really big news, I think, for user experience is the expectation that all 4 iPhone 17 models will get promotion display technology.
All 4, even the standard and Air models.
That's the rumor. 120 hertz refresh rate across the board. That means smoother scrolling, smoother animations for everyone, not just Pro buyers. It's enabled by using LTPO OLED displays, which can adjust the refresh rate dynamically, also helping save battery. This really narrows that perceived gap between the base and Pro models, making the standard ones potentially much more attractive. Oh, and there was a rumor about a special scratch-resistant anti-reflective coating being canceled due to production issues, so maybe not getting that this year.
Okay, promotion for all is definitely a big deal. What about the usual suspects, camera upgrades, and performance?
Camera-wise, a pretty significant upgrade is rumored for the front camera, jumping from 12 megapixels to 24 megapixels across all models, so much clearer selfies and video calls. For the rear cameras, the iPhone 17 Pro Max could be getting a huge boost, potentially a triple 48 megapixel setup for the wide, ultra-wide, and telephoto lenses, and maybe 8K video recording support for the first time on an iPhone. The new iPhone 17 Air is expected to have just a single lens rear camera, but still a powerful 48 megapixel one.
And under the hood, the chips.
Chip strategy looks interesting too. The iPhone 17 Pro and Pro Max are expected to get the brand new A19 Pro chip. But The base iPhone 17 and the new 17 Air might stick with the A18 chip, the same one expected in this year's iPhone 16. Now, this raises an important question, doesn't it? Will Apple face criticism again for splitting the chips like they did with the iPhone 14? And how might that affect buying decisions for people really weighing value for money? We're also hearing about RAM increases, maybe 12 GB for the Pro Max and 8 GB for the others.
Okay, so potential chip differentiation again. What about smaller but still important things like battery, charging, connectivity?
Yeah, some incremental improvements expected there. Slight bumps in battery sizes across the lineup are rumored. Potential support for faster 35-watt charging. That's a step up from the current 20-something watts. The Pro Max might also get a vapor chamber cooling system, which would help manage heat during really intensive tasks like gaming or maybe that 8K video recording.
And connectivity. Anything interesting happening with modems or Wi-Fi?
This is quite significant from a strategic standpoint. The iPhone 17 Air is expected to be one of the first iPhones to feature an Apple-designed 5G modem, moving away from Qualcomm. And all the iPhone 17 models are rumored to get Apple's first custom-designed Wi-Fi 7 chip. These internal chip developments, designing their own silicon, it paves the way for a more integrated, more efficient ecosystem. It can potentially cut down battery usage, enhance performance, maybe improve signal quality. It's a subtle but powerful long-term advantage. Also, expect the expansion of eSIM-only iPhones to more countries.
Right, that internal silicon strategy is key. Okay, let's talk timing and money. When can people expect these, and what are the price rumors saying?
The timeline looks pretty standard for Apple. We anticipate the iPhone 17 series launching in September 2025, probably a keynote early in the month, maybe Tuesday the 9th or Wednesday the 10th. Pre-orders likely that Friday the 12th, with the phones hitting shelves on Friday, September 19th. That's the usual cadence.
And the cost, any potential sticker shock.
Pricing is always tricky to predict. Leaks suggest the standard iPhone 17 might hold its price, maybe around that $799 mark. The new iPhone 17 Air could slot in a bit higher, maybe $899. However, the Pro and Pro Max models, they could see a price increase. This could be due to the new design elements, the upgraded cameras and displays, rising component costs generally, and even potential impacts from tariffs. So, bottom line, Apple's pricing strategy here will be really critical. They need to justify these upgrades, especially if the economy is still uncertain and cost pressures are high. Oh, and there's also that rumor about an even more affordable iPhone 17 model potentially launching in early 2026, aiming for maybe under $700, $800 US. Shows they're still thinking about different price points.
An E model.
Yep.
Interesting. And just quickly, looking even further out beyond iPhone 17, any hints about Apple's longer-term phone plans?
Yeah, just brief mentions in our sources. Some speculation that Apple might start splitting its iPhone releases from 2026, maybe lower-cost models early in the year, Pro models later. Continued talk about a foldable iPhone, perhaps in fall 2026. And future tech like under-display Face ID, maybe even a 200-megapixel camera way down the line. It just gives you a glimpse into Apple's multi-year thinking, always trying to push the boundaries of what a smartphone is. That's vital for their long-term story.
Okay, fantastic overview of the upcoming products. So let's bring it all together now. We've talked about the current situation, the future products. Let's properly unpack the full risk picture. What are the major risks investors really need to keep in mind here?
All right, the risks. Our analysis flags several key ones. First, there's that fierce AI competition. There are concerns, valid ones I think, that Apple might be perceived as lagging behind Google, Microsoft, OpenAI in the whole generative AI race. How quickly Apple Intelligence evolves is crucial. Second, that continued weakness in Greater China. It's a huge market, and if sales don't recover there, it's a drag. Third, potential impacts from broader U.S.-China trade tensions. That's always a background risk for Apple. Fourth, some sources point to maybe a slower product innovation cycle compared to some hungry competitors. And finally, as we discussed earlier, significant valuation risk. Those high price-to-book ratios, the DCF indicating overvaluation, these are real headwinds for the stock price itself.
Okay, quite a few challenges there, but Apple always seems to have powerful counterweights, right? What are the mitigating factors?
Yes, absolutely. You have to balance those risks with Apple's almost unique strengths. That ecosystem lock-in effect is incredibly powerful. Once you're in, it's hard to leave. The robust growth in the services business provides recurring high-margin revenue, which investors love. The company's phenomenal cash generation allows for massive shareholder returns, buybacks, and dividends support the stock price. And then there's the brand. Enduring brand loyalty and significant pricing power, they can often charge more, and people still buy. So broadly speaking, it's this constant tension, isn't it, between these external pressures and Apple's deep inherent strengths.
A balancing act indeed. So let's summarize the investment outlook then. The overall recommendation is weak hold, but how does that break down based on how long someone plans to invest?
Okay, let's break it down by time horizon. For the short term, say the next 1 to 6 months, our analysis suggests avoid. Why? Because of those technical headwinds we discussed, the kind of mixed reaction to the AI strategy so far, and the valuation concerns. It seems like upside potential is limited right now.
Okay, avoid short term. What about medium term? 6 to 18 months.
For the medium term, we rate it as moderate. Here, the upcoming iPhone 17 cycle and potentially more progress on Apple Intelligence could act as catalysts. But there are still significant execution risks. Will the iPhone 17 really boost sales?
Yeah.
Will AI features impress? So moderate potential, moderate risk.
And the long term, 18 months plus.
For the long term, looking out beyond 18 months, the view becomes more attractive. Why? Because of the strong underlying growth in services, those powerful ecosystem advantages we talked about, and the eventual potential for Apple to monetize its AI strategy effectively. So for patient investors, those willing to ride out some near-term ups and downs, Apple remains a compelling story long-term.
That makes sense. And for those who might be considering trading or finding an entry point, any specific levels mentioned?
Yes, the analysis provides some potential entry ranges. A conservative entry might be around $177.67, which is near a recent technical support level. A more moderate entry could be around $191.03, that's about 5% below the current price. And an aggressive entry might be considered around $180.97, roughly 10% below where it is now. It also suggests a stop-loss level around $160.75 below key support to manage risk. And potential take-profit targets are mentioned at $231.24, representing about 15% upside, or perhaps closer to the previous resistance high around $225.19.
Okay, very specific guidance there. So wrapping it up, the core conclusion seems to be Apple is undeniably a quality company, strong fundamentals, great brand, but the current valuation combined with these near-term headwinds makes it less appealing for quick gains. Patience looks like the key virtue for long-term believers.
That sums it up well. And perhaps it leaves us with a final thought, an important question for you, the listener, to consider. As Apple navigates this really competitive landscape, especially pushing into new areas like AI, how much does that incredible brand power and locked-in ecosystem truly insulate it from market volatility compared to other tech giants? It's something worth thinking about.
A really great question to ponder as you weigh your own decisions. Thank you so much for tuning in to this deep dive today. Remember to keep learning and stay well informed.